Good afternoon, everybody. Welcome to TraderMerlin show for your, I can't even know what day it is. It's Friday. I'm so used to being solo on a Friday show. It's different to be having a guest on the Friday, and I was so busy getting things ready. I'm strangely missing a frosty beverage in my hand, so I will air cheers everybody. I have my glass downstairs, so unfortunately I don't have a glass with me today, but maybe I'll find one by the time the show ends today. Today's show, again, is going to be a little bit different. Obviously, we usually do a weekend roundup, which I may do some of that a little bit later on, but Larry couldn't join me yesterday, so we said, you know what, let's bring him on Friday. Today we're going to have Larry on to talk about trading options. He's been doing a ton of work kind of revamping the Online Trading Academy options course, and of course he's a very active options trader as well, so I thought let's bring him on to talk about that course and his focus session. So Larry Jacobson joining us today. How you doing, Larry?
I know it's been a long time since I've been on here. I think I was your first guest in the new year, right?
I think you were. I think you may have actually been one. Yeah, the first guest in the new year. That's our tradition, though. Our tradition is Larry comes on, we do a yearly outlook, kind of forecast of what's going to happen for the year, and it's actually probably one of my favorite shows to do. So glad to have you with us, my friend. Everything new and good in your world?
Yeah, everything's been busy, but real good. You know, we just launched a brand new revised options class going to 7 days. We're really happy with it. We just did an on-location class in Irvine, and then we just did an online class with over 300 students. And that was obviously an interesting situation, but everyone did great. And I think a lot of it has to do with we went back and kind of resimplified the process and how we're teaching it. And this past Wednesday, I was on with 12 fellow option instructors, kind of training them right now at the new class and what we're going to be doing in the classroom going forward.
I love that you just say 12 new options instructors. It was not new. It's just that they need to learn the flow of the new content. Let me ask you this. This has been a gripe I hear from students in the past, which is, well, why do you have to revise the content? If the content was fine, then why do you have to go back through and change it? Because maybe they got used to the program, maybe they've taken the class a few times. So walk me through the thought process of why this needed to be changed and upgraded.
Well, we had two things that were going on. One was the fact that we had students that may or may not be available to do both classes. They were able to do the first class, but they couldn't get the scheduling right to get in there, or it'd be such a gap of time that it just didn't make sense to go ahead and do two separate 5-day classes. And then there still were some students who said, I really want to learn spreads. I don't want to wait to the second class. So what we did was we kind of looked at the classes, both of them, and said, where can we move some things out? Now, the one thing we did not do is we did not take away any strategies that existed in both classes. So some of these strategies now are on demand still, like the deep in the money option strategy. We also have now kind of revisited how we do core strategy review during the class. And as well as the fact that we now have the opportunity to take students through some more things that they wanted, like options with stock or some type of underlying protection. So we're doing 9 naked option strategies. And it's important to always bring up the fact that every time a student hears the word naked, they immediately think it's about selling, which is not untrue, but you got to remember that what naked simply means in the world of options is that you're trading options without any stocks or underlyings in the mix. Right. So when we do a covered call, for example, we're selling a call against a stock that is owned. When we do a protective put, we're buying a put against stock that is owned. So they're covered in the sense that they have protection from the underlying, whereas a naked option is truly that. There is no stock protecting it. And as a result, we're teaching students how to more efficiently, first and foremost, manage the risk associated with options and then get them into some different strategies. So with that being said, we got a lot of great response of students enjoying it. Doing 7 days seems to be the right mix, but we're also offering night classes as well. So some students are going to enjoy the fact that we have what's called a flex class, where you can take the options class over a 3-week period. And that does tend to go ahead and carry over through an option monthly expiration. So you get a chance to be trading in different market conditions and allowing students, based on the pace they want to take the class, either to do it all at once or, like I mentioned, take it at night where they can break it up into a 3-week class.
So you've gone from 2 5-day sessions to a 7-day, right?
Correct. And I think it also helps in the XLT. We have made a commitment that all the strategies we now teach in the 7-day class will be done in the options XLT classes as well. And there will be some other kind of more bonus sessions to go over some of the strategies like deep in the money. I just did a session today talking about volatility and buying puts in a very high volatility environment around supply. So there's new things that we've been introducing in the class. We built out the pre-essentials, some things terminology-wise that they can learn before coming to class. And we feel it made the difference. And a lot of students seem to be very happy. And probably first and foremost, a lot more trading.
Yeah.
A lot of students really wanted to get on the computers, go through the process of putting on the strategies with the instructors, and we've done that. So I would say about half the class, believe it or not, is on the computers. And there's also homework that we're doing at night to give students the opportunity to be able to take some of these trades they did during the day and spend a little more time that they have available going over it at home online, so that they can go at their own pace and feel comfortable with the lessons they've learned.
Nice. You know, one thing that, and this has been my struggle with options, and people ask me about options all the time. I am not an options expert. I'm good enough to be dangerous. I found a strategy that I like, and honestly, I just said I'm sticking with this one. That said, I do want to learn a few more of them. But let me go back to your initial comment. You mentioned that you have 9 strategies being taught in this options program. You know, for somebody who starts off trading stocks or futures or Forex, it's very binary. I can go long or I can go short. Like, there is no middle ground there. You don't do a spread trade and an equity. You know, it's just very simple and directional. And even with just those 2 simple strategies, I find that traders have a very difficult time figuring out which direction to go, mapping out the trades, planning the trades. How do you, I guess, because you're a master at it, I've witnessed you through the fishbowl window outside your office, controlling that environment of, you know, a couple hundred students where you have 9 different strategies, and each one of those can be incredibly complex. So I guess my question is, you know, how do you manage the 9 strategies and people's adoption and understanding of those 9 strategies when just learning 2 in stock market can be so challenging?
Well, you brought up a great question. So I'm going to address them in kind of 2 parts, if that's okay. The first one is, you know, unlike the other asset classes, you're absolutely right. A lot of times they are purely directional, meaning that until price gets to an area where they believe price is going to turn, either a high price or a low price, a lot of times students in futures, Forex, and stock are waiting. In fact, if you really want to take it to a bigger level, if you think about a monthly chart, right, and we take it from the perspective of, on a monthly chart, we're not going to see those bigger swings of high and low in terms of creating new uptrends or downtrends as often as we'd see on lower time frames. So if we just think about this process of about 20% of the time, markets on a monthly chart are making brand new higher highs. So that means as a long trader, you're making some money, but you're really not making a lot of money until you kind of keep forging ahead, seeing prices going higher and higher as a buyer. Same thing if you look at the broader market on a monthly chart, it's only about 10% of the time that we see the markets actually making lower lows on a monthly chart. Same thing happens. You can short stock, you can be in trades. The problem, though, is if 20% of the time we're waiting for a new high and 10% of the time we're waiting for a new low, that means, unlike option traders, futures, Forex, and stock traders are sitting on the sideline 70% of the time. They're in a position where they have to wait for price to do something and move for them to be able to make money. Well, in the world of options, why I love it so much is that price doesn't have to move. In fact, I'll give you what I think is a pretty good analogy. Okay. Let's say, for example, right, you own a car and every month you are paying insurance. So like a good driver, you pay your car insurance every single month. And I'm going to ask you a question, Merlin. Who's happier? You or the insurance company when you don't crash the car or you don't get sick? Who's happier? You're the insurance company.
We're both happy, but the insurance company's happy because they collected money.
Right. You're both happy, right? You're happy that you didn't crash the car, you didn't get sick, and the insurance company's very happy they didn't have to pay out a policy. But like the markets, and I want you to think about this, and I want the listeners to think about this. If most of the novices, like insurees, are paying all the time, and the insurance companies making all the money, and the banks and institutions in the markets are selling against those buyers making money all the time, then maybe we're not on the right side of the trade, right? Think about that. Because if I'm collecting premium and I don't have to worry about an event that might cause some devastation in the markets, then I can manage that risk. Well, that's what option traders do all the time. While the stock trader, futures trader, or Forex trader is waiting for something to happen, the option trader can be in the markets trading based upon market conditions. Now, that leads into my second point. One of the things that took me a while to understand, and I'm very fortunate because I got a lot of this foundational information when I got to become a student here at Online Trading Academy in 2010, was there are really three factors that move an option. Okay. The first one is the price, obviously. So you have to decide what side of price you're going to be on. Do you think price is going to go up, down, or sideways? Secondly, with the exception of futures, stocks and Forex don't have any expiration. You can be in a trade indefinitely until you decide to close the trade. Futures, a little different than options, do have expirations, but everybody rolls on the same date. There's that rollover date where with options, you get to choose the amount of time you want to be in a trade, thus the amount of risk you're willing to take on. Now, the one thing that really separates options from every other asset class, which is kind of what you're asking, is this concept of volatility. Now, some people understand it, most people don't understand it. And really what volatility is, and I'm going to give you a dumb question that I give my students in every class, but it'll make complete sense. Volatility in the world of options is similar to what I'm about to ask you. You drive your car. What makes the car go faster, your gas pedal or the speedometer?
My foot on the gas pedal.
Correct. Well, that's the same thing in the world of options. People somehow believe that volatility is driving where it's really reflecting what's happening in the market. So, for example, when all of a sudden there's a panicked market where we start to see price really selling off and prices start to drop, the candles will start getting bigger. As a result, volatility will start to increase. Whereas when we are in more calmer markets, the candles tend to get smaller, the volatility goes down. What I learned here at Online Trading Academy is pretty simple. We want to understand at any given point in time where a particular underlying is in its volatility cycle. So you might have one stock that is trading a lot more aggressively than another stock. So I'll give you an example. When we look at a Tesla compared to Kellogg's Foods, right? You can look at those two charts. You will get much bigger moves in Tesla than you will ever get in Kellogg's, unless, of course, somebody chokes on something in a cereal box or there's something that bad that happens. But most of the time, it's pretty consistent. Well, if I know I'm trading certain things or I'm looking for more volatility, then it gives me an opportunity to make a decision on the best strategy designed to handle that current market condition. So what it took me years to figure out, and I never would have gotten here if I wasn't educated the right way, was trading options really come down to two things. And I know it may sound like a simplification, but it really is. The first one is where. Where are you going to enter your options trade? Now, for our Online Trading Academy students, they have an edge over most people in the markets because they have been trained in something called core strategy, which was designed to teach them how to time the markets. Unfortunately, most novices, what they tend to do is they tend to get very emotional, or even worse, start to predict or forecast where they think price is going to go. And as a result, if they have even worse, what's called an up or down bias, then all they're going to do is buy, or all they're going to do is sell, the same way a stock trader first starts to trade options, or then the other biases come in. So really, once you understand where you should be looking to enter and exit those trades, that takes a lot of the confusion out of the way. The second thing, which you asked me earlier, was, well, how do I know if I buy or sell or do nothing? Again, that's based on something you learn about volatility. And unlike the other asset classes, where in stock, more volatility, we tend to see the spreads get wider. Futures, the spreads get wider, but you also see the margin requirements getting larger.
Right.
Forex, you'll see the spreads get wider on the pips. Options, you actually can make or lose money by a change of volatility because price, time, and volatility are three independent variables of risk that once you learn the right way to do this, you know why you're going to be buying, you know why you're going to be selling, and it won't be so arbitrary as your uncle telling you all you do is this, or your best friend saying all you ever want to do is that. And that's where I find a lot of option traders have this problem where very high winning percentages, but have no money in their accounts. So you got to ask yourself this question, and I can only want to get away with it since I'm a Vikings fan. I've shared this one with you before, Merlin, is that Kirk Cousins is always being said he's one of the best quarterbacks in the league. Well, for me, that's great if he actually scored touchdowns. So when you tell me that he's got such high stats, it's the same thing as a trader telling me they have a high winning percentage. But the Vikings aren't in the playoffs. They're not in the Super Bowl, which means they're not doing what they need to do, score the same way a trader when trading options needs to generate profit and, more importantly, manage those trades to keep the profits they made.
Absolutely.
So, yeah.
Yeah, no, just kind of curious on that because, there are so many strategies, and that's been the part that's turned me off personally from options is that there's just so many different ways to trade things. And I know we've got viewers out here who have different strategies and techniques that they're using. Tell me a little bit about your progression because, you've been trading, you've taken a bunch of different classes, not just with Online Trading Academy, with other people as well, and learning different strategies. But you have a specific style and approach that you have towards options. Is it safe to say that you're not using every strategy? You have just a couple that you really focus on?
Yeah, and it's also what's happening in the markets themselves. So, for example, if I am more in a non-trending sideways market where I'm more range bound, then I'm more likely to want to be selling credit spreads because one, there's not going to be necessarily the breakout factors that a lot of the novices are looking for. And two, what people fail to remember is that the way you make money buying options is price must move.
Right.
So when you start to look at a chart, and one, you're not as familiar with trend. Two, you don't really understand trend reversions or reversals that happen at certain areas on a chart. You're buying with this idea that I got a lot of time. It's almost like, think about it, a lot of buyers who are not educated. It's like going on a game show like Win It in a Minute or Beat the Clock, right? They ask you, hey, Merlin, you ready to take our money? And Merlin goes, yes, Larry, I'm going to take all $100,000. Problem is, the show knows Merlin's chance of being right is very diminished. They wouldn't be offering all that money.
Right.
So when they first start out, everybody's confident they're in the right trade. They know what they're doing until it gets closer to expiration, like a game show, and you start hearing people say 10, 9, 8, 7. So for me, what I've really done is gotten very, very good right now of deciding, and I'll ask myself this question. One, what do I think the market's going to do next? And it's not arbitrary. I'm actually using core strategy and really starting to look at probability. Now, one of the things I've been teaching our students at Online Trading Academy is how to use ATR as a way of helping you kind of forecast out that even though you think it's possible, based upon what this particular stock's been able to do in the past, it's like back in college, right? Remember those days, Merlin? Oh, God, I promise if I get through tonight, I'll never
do it again
until tomorrow.
Yeah,
right?
Yeah, that's pretty much my college experience.
Happens that people will get this bias, and because they've tried to buy a couple of times, they all of a sudden believe they can't do it anymore, and all they should be doing is selling premium. Well, this is where volatility comes in. If you're selling in an area of volatility where you should really be buying, or vice versa, and then all of a sudden that volatility goes against you, you can have the right direction on the chart. You might even pick the right underlying call or put, not the right strategy, but you did not understand how the world of options really work. So for me, the way I look at it is, and you and I have been doing this for so many years, I still bother you with this every Friday, is that educational only value investing portfolio.
Yep.
And some students are going to be like, I really think this is a great bargain right now to own the stock. Problem is they can't afford it. So right there is a beautiful opportunity, if everything's working according to your plan, to use a stock substitution strategy of just buying a call. if you want to own the stock, or buying a put if you want to short the stock. So that's the most basic way you can use options if you're good on direction and you understand how volatility and time works.
And that's been my approach. I mean, I'm pretty much not trying, but I'm trading directionally. And if I want to own something at lower prices, I'm behind selling puts, and I'll sell calls against my position if I need to. But I just keep it as absolutely simple as possible. And there's that old adage that says, if it ain't broke, don't fix it. And here we go. I'm just
Absolutely. But understanding why you've lost in a buying scenario is
right.
as important as making money. Then there's the I own stock right now. And as I teach students, there's two strategies that are pretty well known out there, the covered call and the protective put. Well, covered calls are great. The only exception that you have to be willing to sell the stock. It's amazing to me that people treat the covered call like a casino. And what they wind up doing is they say, oh, I can sell calls, collect all this money while I'm waiting. And then when it's time to actually give up the stock, they go, yeah, no, I don't want to really do that. And I have to buy back those calls more expensively than where they sold them. Or protective puts, where you have an earnings announcement coming up, or maybe there's a market correction coming, or even worse, a crash, and students don't really understand how to properly protect themselves dollar for dollar. And so to me, when they just put on puts as protection, I call that the 401k. You think you're doing everything right, but then down the road you go, what happened to my money? I didn't make what I thought I was going to make. And that's again because of the fact that you don't understand. And then the last kind of landmine is those people who hear all you do is sell options, and they forget when there's lower volatility, it's going to bring your strikes much closer to current price, which brings on more risk. Or they're not really looking at risk in general and realizing, wow, am I really willing to lose $450 to make $50? Okay, that is another casino mentality that once they start losing on the table and they got that last dollar chip, they think they're going to sit there at the table and make it all back when the law of probability is going against them. So these are the things we really started to focus on in the option class, is how do we marry this idea of finding the right location with volatility to be able to then align the right strategy to that particular situation and time in the markets. So what we've chosen in the class are really the ones that most people are more likely to want to use and are pretty consistent and well known around the industry.
With all, and there's a lot of different ones. We could go into each one, but I think most people understand what those different strategies are. Big Ab, good to see you, my friend. I hope the move is going well. There's two questions here, both on the same thing. Glenn and Eric ask, when will you teach a class on options on futures? Is this something that the team is going down that path of potentially having an options on futures course?
We're talking about it, but let me explain why people, it's like anything else that's a shiny object. Years ago, when all you had were E-minis and you wanted to go in and trade futures, you had a very large margin requirement, especially the initial margin requirement. And so one of the ways that you could participate in the futures markets was to go ahead and trade options on those E-minis. But if you go down to a micro contract, there's not a lot of open interest and liquidity enough to get you great premiums. And also remember that the micro futures contracts have also been cut down to 1/10 the value of the particular ones. So again, what people have to understand is you're trading a derivative on a derivative. So you better make sure you understand all conditions as it relates to the futures markets. You understand how to time those charts, as well as now you're bringing in another component of options. So we've talked about it. The problem is, do you want to give somebody something that's dangerous enough for them to hurt themselves on? Or do you want to make sure that they're in the right context of what they want to do? And again, a lot of people hear about this. Talk to some of the people out there who have lost a lot of money on options on futures, and you might go back and go, oh, why am I really adding an additional piece to something that can remain so simple? Yeah. So that's kind of our approach on it. We're talking about it. But again, if we do offer it out, one of the prerequisites are going to be you have to have taken the options in the futures class. We're not just going to let you take it pure blank out there and hurt yourselves.
Yeah, I think the challenge, like you mentioned, when you have something shiny and new, you hear about these new asset classes or new things, and while it may sound appealing, you're right, you're using leverage on top of leverage, and there's a whole different level of complexity there with those two instruments. And I just have to ask the question. I think that everybody here would agree that if you just trade the futures market, you have plenty of leverage. You'll do fine. And I think part of the allure of the futures market is, for many of these markets, you do have 24-hour trading, right? You can trade it anytime that you want. Now, options on those futures, yes, now you can trade those options in the after hours. However, do you really need it? Eyal had a real issue with the cryptocurrency program that we built simply because it was too risky. He didn't really want to expose people to that kind of risk. And I was like, look, it's not just about the instrument itself. It's understanding the risk management that goes along with it. So if they do decide to do it, I know that Larry and Todd and Steve and the rest of the team will certainly make it the primary focus around those options on futures will be around risk management and how do you protect yourself, because that is going to be a kind of a high-powered vehicle, meaning it's using a lot of leverage, and it's always great if you are on the right side of the trade. I mean, how many times can you go to YouTube and type in Dodge Hellcat crash and you see some guy who's only driven a Honda Accord? It's all he's ever driven is a 4-cylinder Honda Accord. They're like, here, man, drive my Dodge Hellcat that has like 790 horsepower, and all of a sudden ends up stuck to a wall somewhere on fire. That's the same equivalent to a lot of people who trade with leverage that don't understand it. So, start slow. I don't think there's any rush on the part of OTA to get to options on futures, but it is something more and more people are talking about, so they'll probably get that down the road. Indigo Clover asks, what does that mean volatility can go against you?
Okay, what that means is that as a buyer, okay, if the volatility starts to go higher, that will add premium through Vega, one of the Greeks, through Vega. So if I'm buying and my goal is to increase the premium from where I purchased it, then volatility is a good thing. But if volatility starts to go lower, not higher, it's going to actually subtract through Vega the premium that you paid. So I have seen people actually buy, give you an example, long an option, and they do it as the wrong type of volatility, where it's in a situation where they should be considering selling and not buying. And all of a sudden, price starts to go higher, but the volatility starts to go lower. And therefore, it either negates the increase of price on a chart or drop on a price on a chart. And it then turns a potential winning trade into a losing trade. So a lot of newer option traders who are never really exposed to how volatility truly works find themselves frustrated unless it's a strategy that's designed to not worry about the volatility, such as a weekly option. But again, as I mentioned, if I don't get enough volatility to generate premium that I need, then there's no reason taking the trade to begin with. So there are people out there that are putting themselves in a lot of risk, not understanding how the options market really work. And that's where this confusion of, oh, options are complex, you can't make money with options. That's true. It'd be the same thing if I put you in front of a board game with a bunch of expert players and you were never taught the rules and you're kind of making it up as you go along. You're picking up what you can. Mm-hmm. So to me, it's no different. Options are very methodical. Once you understand the rules, it gets easier to put on the trades.
So one of our viewers, Tom, he sent a very long question that it was really detailing wanting to know more about your trading strategy, which I know you teach in your focus sessions. But I want to ask, 0-day to expiration options. This was obviously Tim Blotzer. He had his rubber ducky thing that he was doing for a long time, was a 0 DTE. I know a lot of traders do 0-day to expiration. Let me get your take on 0-day to expiration options, risks, rewards to it, and is this something that you do on a regular basis?
Okay, I don't usually like to do 0-day to expiration, and it's a personal choice. One, again, because it's expiring that day, if the volatility is not working in your favor, you're going to pick up less premium the further you want to get away from current price. So you got to remember, and this is something that people only really focus on the profit side, not so much on the risk side, is that you're in a trade that's rapidly expiring throughout the day, which means that price, if you're buyers, has to move faster than the decay to be profitable. As a seller, you have to hope that price either doesn't move or goes in the direction you need it to, that helps the cause of getting that decay to zero by expiration. And so the risks that are involved are, one, if I need to get decent premium, and again, some people have their rules, and I would say if it's working for you, stick with it because you figured something out that works for you that also allows you to collect whatever premium you need. So, for example, if somebody's doing a strategy that's very far away from current price in a low volatility environment, and you're picking up 5 cents or 10 cents, you're basically making $5 or $10 a contract. Now, that's fine if you can afford to trade 20 contracts. And then all of a sudden on a 10-cent option, you're basically able to bring in like $200. But the problem is, can you afford the buying power to tie up 20 contracts in a particular last day trade?
Mm-hmm.
So the other problem that's kind of dangerous is there are things that happen in a day that we can't control. If all of a sudden something unknown happens in the world, there's negative news, something comes out that really spooks the markets, you have no time to react. And yeah, you can have a rule that says, I'll get out 2 or 3 times earnings, but once that price rips, you're going to get out where you're going to get out, regardless of whatever stop limit price you might have given yourselves. Or if you do a stop market, you get out at this particular price, but you'll still get filled at the market order. So for me, and as you mentioned, I teach a weekly class called Trading Weekly Options. I prefer to go out 5 days, okay, before expiration if I can. 2 reasons. One is the fact that price will move, but it's not going to decay at the speed it's doing on a 0-day to expiration trade. 2, I teach rules in that class of how to get out way before it gets to your short call or short put. That's another problem, is you have to be really good on trend. You have to be really good on what's going on and reading the charts, because biggest problem that most people have is they realize that if they stay till expiration, there's a chance that it's going to come back in their favor. And when it doesn't, now they might have to pay even more to get out of the trade. So I just tell people who are doing those 1-day trades, they're definitely doable. Just make sure that you have very defined rules and that you're okay and you can meet the requirements of a trade to get what you need as far as the reward that you're looking for.
Nice, love it. Yeah, and I like appreciate that you approach it from the fact that everybody's different. There's all kinds of different tactics and strategies out there, and you have to find out what fits best for you. And Tom, I know that you've been through many instructors before. I know Tom's been through several classes on the Trading Academy, and I'm sure he's picking little things from different instructors. I know he's gone to some other schools as well, and you pick and you find things that work best for you. Let me ask you this one, Larry. Let's just say you're walking down a beach. Hopefully you've got your bathing suit on, but you're walking down the beach and you find this lamp, and you rub the lamp, and all of a sudden, out pops Merlin, and Merlin's in the lamp, and he's saying, Larry, I will give you whatever you think is the absolute perfect options trade. You can have any setup you want. What does that look like to you? If you could say, man, if I saw this happen, this would be, for whatever strategy and tactic it is, this is the greatest trade that you've ever seen in options. What would it look like?
See, I'd keep it simple. So to me, it would come out in 3 different answers. One, if I found a stock like we did back in 15 on NVIDIA, that's a no-brainer. I would love to go long a call on that trade because I've already bought it at a discount. The stock is at an area where I believe it's going to rally over some period of time, and that's where leaps come in.
I was going to say, you can't do it with an option because you can only be in it for a few months. I mean...
No. I can do leaps that go out for 2.5 years. So, for example, we could have bought a January 2017 option back when we looked at it in 15, and we would have seen the appreciation. Remember, it really kind of took off around 16, 17. You could have made appreciation with that. And the other thing about doing leaps for some people, it gives them or buys them time to collect enough money to buy the 100 shares if they want to continue with the stock. So that's kind of one thing. The second one is I love when I'm retesting into a downtrend near all-time highs. And it was a downtrend, and then I can just buy a long put and get out of the way and let it do its thing. That's a great trade to be able to put on regardless of volatility if it's in the right setup. And finally, I love when I'm in a sideways ranging trade and I can just do credit spreads and stay there until it trends again. Other than that, I just know where it can't be and where it needs to be. And so those are probably my three, I would say. Give me that scenario like we had for a year on IWM. You may remember, I think it was in 2020 or 2021, where for a year, all that chart did was go sideways. That was an option trader's dream. And then again, you had things like NVIDIA that's worked really well. And then I also had, Apple had a beautiful setup. It was back, I want to say, a couple of months ago where it hit that supply zone on just a straight rally up. There wasn't a
on
red
NVIDIA
candle in sight on Apple.
Oh, Apple.
If you go to Apple, daily, it was a beautiful long put setup. And then we had another opportunity with it again, just I would say a month ago. So I know that you had a great opportunity in American Express to do that. You had a great opportunity in Apple to do that. So if I see those and I get my eyes trained for those are usually the ones I love to use. And it was funny because I heard Charlie Munger, your favorite,
that old
say something once, but it was pretty profound and very, very transparent. And he said, look, Warren and I are not that smart. We just found things that worked at the right time when we went all in. So that's part of the problem. We're in such a diversified world right now, and diversification is a good thing for people who are unsure if they can get the outcomes they need. If you're sure, like a Buffett and a Munger, and you have the funds to do it, you can take those risks. And that's what he said. On some stocks, we backed up the truck and it worked out beautifully for us. And I'd say I kind of look for those same things as well when I'm putting on trades. And then sometimes I like to look at calendars and butterflies because I can get in for a much cheaper price. Butterflies, I got into a trade that was only 25 cents, $25 a contract. So it's great for some people that want to learn how to put on some strategies that kind of reduce that premium. And even some will turn into a credit spread where I'm actually doing it as a debit, but I'm bringing in more money than I actually have to outlay. And that's kind of found money to me. I love those kind of trades.
Well, so much for just getting one wish out of that genie out of the lamp, buddy. All of a sudden it turned into 7 different things right there.
Well, because you know why? It's like it's anything with the market. You said it earlier. When I'm trading anything but options, it's kind of a one-stop shop. Man, I'd love to get that perfect return to a supplier demand zone. Take that over and over again and how it left.
Yeah.
I have a lot more. I mean, like they say, options give you options. So I find that I have had a much more broader experience in my trading, being able to trade more than just a directional asset.
Sure, absolutely.
I love options.
I know you're busy and tired. Let me wrap this up for you. There's a couple quick questions, but it actually has to do with your focus group. Karen wants to know if it's a 3-day class, something like an XLT. Margaret wants to know. Oh, let's see. Yes. So that's talk me about the focus. What is in your focus session, and kind of what can people expect if they're in there, and what are the prerequisites?
Yeah. So basically, we now have 4 different focus classes. I'll talk about mine, then I'll quickly mention the other 3. We have 2 that are currently being worked on. The focus class is a 1-day class. So I have divided up my strategy into 4 phases. There's a first phase on how to scan for the opportunities. Second phase is how you efficiently set up the chart every week to take advantage of a weekly option that can expire anywhere from 5 days or less. I then have specific rules on when to enter and, more importantly, when to exit. So I've given students in that focus class 2 different ways to get in. 2 different ways to get out for profit, 2 different ways to get out for risk. And obviously risk comes first. So every week we have what's called an application session. And so the class was designed to be a 1-day class with 4 application sessions. Mine happen every Saturday at 8 a.m. Pacific time, and I go till 9:30. Now, during those sessions, I will get into a little deeper dive onto each one of the phases, and then I actually show students my trade for the week. So I'll enter a trade and take them through slides of each day so I can reinforce the rules that they're learning in class. Now, what Al Shahar did, which I thought was really cool, he said, look, if anyone wants to buy the focus class, as long as we're still offering it, then a student can keep coming back and taking the 1-day class over and over again, and they can continue to stay in those weekly application sessions. So I kind of officially launched this class back in April. And since then, we've had a bunch of students who have been there since the beginning in April when the course was first offered. The other three, the students have different needs. Some like to learn more about diagonals and calendars, where that's kind of a synthetic version almost of thinking about covered calls. And Steve Szyminski, who authored it, is kind of right now showing students how they can set up different strategies designed to be in a longer option against a shorter option. So that's a great way to be able to kind of synthetically do a covered call without necessarily having to buy the stock. Then you have Mark Schlichting, who authored a focus class on ratios and butterflies. This is where we're in IV number 3 in our IV gauge. It's very fair value, the most amount of risk, because volatility can go up and down. And Mark teaches students how they can set up these butterfly strategies that can be done in a retirement account. And that's the ones I was mentioning that can be as cheap as $1 to like 25 cents. And it's really about keeping price within a range. And the fourth one that Russ just recently came out with is a lot of students would ask, how do I trade around earnings? And so we have a class now on straddles and strangles, which allows students to be in a trade leading up to the earnings announcement. And then once the announcement happens, how they can take advantage of maybe an explosive move in either direction. So those have been the focus classes. We also have one that Bashir Chaya is finishing up on value investing. That's kind of the takeoff of what Merlin, you and I were doing.
Right.
And I helped Bashir with that one. And ANET, the one that you and I found years ago, just had another resurgence, has been up on the option right now. Looking at it's up about 130%. And that's been about a month and a half.
Damn, Arista Networks.
Yeah, Arista Networks, exactly. And we found that one, I think you and I were talking about that one going all the way back to 16 or 17. That's how long ago you and I have been talking about that.
It's crazy.
Stock.
So as you mentioned, NVIDIA, I'll bring NVIDIA up here. Was it 2015 or 16 that you brought it up on the show?
It was 15. It was in the fall. I want to say it was around October, November.
Well, I can tell you right now, because this went through a 4-to-1 split. And when you came on, it was at 60, but you would I think it was at, no, was it 30?
You wanted to try to get me to sell it at 60. We were talking about it when it was at like 38, 39. Yeah. And then you're like, it doubled. Aren't you going to sell it? And we said, why? It's not the purpose of it. Now it's a 4-to-1. So now imagine you're talking about a $10 stock in NVIDIA right now.
Yeah, that's crazy. Wow. Yep. Well, it's on a heck of a pullback now. Maybe next time we'll talk, I guess, broader and talk about mining equipment and cryptocurrencies and digital assets, because I think this is one of the big reasons you're seeing NVIDIA take a big dump here is this war on proof of work technologies, but that's a discussion for a totally different day. All right, Larry. Well, thank you. I apologize. It's been so long since we had you on, but I know you're a busy man. I'm always trying to get you on, and he's always teaching something somewhere. You've got your focus classes. I know you've been doing the options class as well. Are you doing any like XLT general sessions, or where else can people find you?
Yeah, I in fact did a bonus session today. Usually once a month I'll come in. I do a 2-hour session. The first hour is for brand new options students. I like to focus on a topic. So today we talked about, with the markets being where they are, and there's a potential that we might see a correction, how can you use volatility in your favor to be able to determine whether or not you want to go long or short an option to take as much advantage as possible. And the second hour is usually me just bringing up 4 setups that I like and kind of talking through why I like those setups. It turns out I'll be back on Tuesday. Mr. Szyminski has a vacation, and I'm going to sit in his chair on Tuesday for the options XLT. And then I'm teaching the trade plan class at the end of the month. So a lot going on.
Excellent. Well, you're a busy man, Larry. Again, thanks for all that you do. I've heard great things about the new options class revision. So congrats to you and your team for all the adjustments that you've been making there, and best of luck to you in all your focus sessions and all the other classes you teach. Thanks so much.
Thank you, brother. Talk to you soon, and glad to finally be back on Trader Merlin. Love what you're doing. Keep doing it.
Go Vikings.
Go Vikings.
All right. Talk to you later.
Bye.
Guys, that was Larry Jacobson of Online Trading Academy giving us a little update on kind of the need and why the options class has been changed. I guess making it more accessible to more people. Larry taught the first couple of these ones, and I would encourage you, if you have taken options classes or just any class really, retake it. And if you can, retake it with a different instructor than you took the first time. I think many of you here are Online Trading Academy graduates, and you understand the power of even if it's someone that you don't gel with, you just don't click from an education perspective, you'll get some golden nuggets from just about every instructor that you'll take. Well, which is really one of the big value adds for me when I took classes back in the day. There was actually one instructor, and then all of a sudden it started to grow from there. And next thing you know, I'm talking to all kinds of great instructors. So that was Larry Jacobson. Again, if you want to know more about his programs or anything to do with Online Trading Academy, just go to tradingacademy.com. You can go to their website there and click the little register now. It'll give you a free workshop button. But I think most of you are in some way, Online Trading Academy or taking a class anyway. So there you go. And yes, there was a question, is this just for OTA graduates? I think from Margaret. Yeah, that is for OTA. You have to be an OTA student to take those focus courses because they're just really specialty classes on each individual instructor's personal style. And I think that's where things really get interesting is, there is this foundational piece that Online Trading Academy teaches, and it says here's core strategy and then here's the foundations for options. But if you look at somebody like CliK and Jacobson and Suminski and Russ Allen, they have a specialty. I wouldn't say that it's the only thing they do, but they have a specific way of trading that they love to do. And that's why I asked Larry, I said, if you're on a deserted island and you come across this genie in a lamp and he gives you one option strategy or setup, what's it going to be? You can tell right away that Larry likes all kinds of different strategies. I was really hoping he would have said, this is the one. Like, this is the one that just makes me wake up and go, yes! I know that, you could look at your Tim Blotzer. Well, his is a zero-date expiration. He probably traded other things too, but that's really what he loved to do. And I think each of these instructors brings that to the table and says, this is what I'm doing, butterflies, I'm doing credit spreads, and specialize in that and just have a specialty class. So I like the idea. I think it's a good concept to do that. I love this Chevy Vega. I'm more of a Chevelle fan myself, but I don't know if there's a Chevelle option strategy, Chris. Chris, you're not much of an options trader, are you? You're a crypto guy. I think I owe you a crypto show because I know you're a cryptocurrency fanatic. So maybe next week I'll do a special show on crypto if you guys want that. You just let me know, since we are going to see one of the most significant events in the history of cryptocurrencies will be happening next Thursday. It's a pretty crazy event. Maybe I'll do a special on that for you guys, but it's all up to you. You got to let me know what you want me to talk about, and I can talk about anything. That said, let's go and look at what happened in today's markets. I should not just have a glass, I should have a bottle. This is a celebratory day today. This was a great trading day for me, thank goodness. The last couple weeks have had a little bit of some struggles. I'm not going to lie. I'll be honest about it. I had a couple bad trades that went against me and just, got one of those little negative ruts. Today, actually, this last few days have really been great for me. Just awesome trading. And these indexes, obviously you guys know I am long calls on the NASDAQ. I have a pretty good amount of calls. And these last 3 days made it all worthwhile, just really vaulting up. And I'll go through the list here. We'll start at the bottom. Here's gold on the day, 0.43% gain, so not too bad there. I do have calls. Let me see, did I have calls? No, I sold puts at 161. So on GLD. So I may get exercised by next Friday, but I collected a great amount of premium, and right now we're trading at 159.82. So I may actually not even get exercised next week. We'll see how it ends up on Friday. You look at the Dow. Dow was up 1.5% today. Real nice move off of that rally-based rally that I mentioned. We had that back in July. Same thing for the Russell, right? Russell came down to that rally-based rally and then just was ripping up. I mean, the 3-day move in the Russell is just fantastic. Not as good as the NASDAQ, but roughly 5.7% for the move up in the Russell in just 3 trading sessions. So that's great. 1880 is where we closed at. And there is a slight, little minimal blip on the radar here at 1900 for the Russell. Other than that, I think you're going to come back up and challenge those 1960 marks. S&P 500, similar picture, bouncing aggressively. I will, since I've did it for the other numbers, I will do it here as well, just so we can do our weekend wrap up. From the low to the peak, 5.45% move in the S&P, closing near the highs for the week, which is great at 4,084, 1.96% gain. Awesome, love it. And then your NASDAQ 100 up 2.82% today, just absolutely screaming to the upside, which is great. I think for me, we've broken this little, we talked about this zone that was right around, it broke it anyway. And now the target becomes this next area, which is On the Qs, 13,150, which is a long ways away from current price. Now, who knows if we will actually get there, but it's fairly smooth sailing. There's not a lot of issues with regards to overhead supply until you get to that 13,150 mark. So looking pretty good for my long position. Of course, anything can change. Crude oil, getting back on track today. 2 days in a row of green candles, 3.06% to $86 per barrel, but certainly a long ways off of the 124 that we hit back in June. And then finally, crypto. What a day for crypto. Goodness, not only was it this one, but some of the other ones I sold out yesterday. Unbelievable gains in the past 24 hours for some of these cryptos, but 10.62% for Bitcoin in the last 24 hours alone, 21,305. But what's noteworthy here, let me scroll down and show you some of the crypto gains. Luna, 165% gains. I sold all of my Luna yesterday. It just absolutely vaulted. Actually, I'll take that back. I had 50 million Luna Classic, LUNC, and sold out of all of them except 4 million. So I sold 45 million of those things, but it was a huge move up. But you see 16% for Cosmos. Who cares about Ape, because that's just shill coin. Bitcoin, 10%. You have Zcash up 8, a lot of big double-digit gainers, and not a lot of red. So here's Luna Classic, which is the one that I dumped yesterday, except for 4 million of them. Look at that move. I mean, this is just an unbelievable move. I'll go back to August 20th to the peak here. That was a 594% move in 19 days. That was pretty incredible. So my guess is this thing's going to come crashing back down. Yes, Big Eb, not only do we have CPI announcements next week, so real quick, I'll tell you, if my memory serves me correct, you have CPI on Tuesday. Wednesday, you have PPI. Thursday, you have retail sales. Thursday, you also have the Ethereum merge, which is going to be I'm very curious to see how that happens, but that's your big announcements. There's really nothing on the scale for earnings. I think Oracle reports next week, but come on, it's not that big of a deal. So, all right. That's going to do it, Big Eb. Since it's his first day back in a while, I'm not going to do an hour show. It's Friday, it's hot, and I want to go grab a nice glass of whiskey because I want to celebrate this weekend. It's going to be a fun weekend. I hope you all do something interesting and exciting. If you have comments, questions, feedback, put those down below the YouTube video. That's usually what gets put into the show. Talk Track and allows me to custom tailor the shows. And if you have personal questions, you can email me at TraderMerlin@gmail.com. I did have a couple that I didn't get a chance to address today, but I got to get out of here. I am really hot up here in the studio. So I'm going to go enjoy my weekend. I hope you guys do something fun and exciting. Email me if you have any questions or topics for next week. I'm going to work on getting a couple guests on the program as well. So that said, happy Friday, everybody. Cheers. I'll see you next week.